right, well, good morning and good afternoon, and welcome to the September 2023 WASDE Review webinar. My name is Andy Miller with DTN. I'll be your moderator today, and with me, as always, is Todd Hultman, lead market analyst for DTN, and I believe right near Husker Harvest today, so he is in the thick of it. During this event, all participants will be in a listen-only mode. You may ask questions at any time during the event, and to do this, use the Q&A section on the bottom right of your screen. This should open a panel where you can type your question. We will address those questions at the end of the webinar after Todd has finished his presentation and report. Also, a quick reminder for those who maybe haven't been here before, we do post a rebroadcast of this session on dtn.com within 48 business hours. I think that sets us up. Todd, I will turn it over to you.
Very good. Thank you, Andy. Thanks, everybody, for joining us. As many of you probably know, this is a somewhat special report in the process of estimating this year's corn and soybean crops. This is the first time USDA will actually gather field data samples as well as do a survey of producers. So it's another step getting closer to a more accurate estimate. So there's a lot of anticipation about today's numbers. The other thing that's unique about this report is that it's also a time when USDA considers its other sources of planting data and makes tweaks to the planting estimates. So we'll see a little bit of that today also. But so let's go ahead and get started here. And I just want to point out where we stand in the process of estimating crops. So these bars represent the margin of error, or they're the 90% confidence intervals. And when we started this process back in May for corn, it was basically when USDA estimated the crop, the margin of error around that was plus or minus 24%. Well, now that we're into September, and as I say, we're including the field data, now that corn crop estimate is plus or minus 7%. And that's just based on about 40 years of history of USDA making these estimates. So as you can see, as we get closer and closer to harvest, those estimates get narrower and narrower. October tends to be a fairly very good, accurate estimate of what's going on. Today, as I say, is a step in the process. It's a little better. It's certainly not perfect, and there's still a lot of questions that we're going to see in today's report. And there's going to be a lot of questions until combines actually get in the field the way things have gone this year. We've seen such a unusual year and cycle of weather through the season. We just don't have a lot of comparisons to judge by. So getting in the field this year is really going to be important for honing down the estimates. With all that said, let's go ahead and look at the U.S. balance sheet for today's corn estimates. The farthest right column are the new crop estimates. But first, before we go there, I want to point out on the left column, that's the old crop estimates, and that season just ended on August 31st. So USDA making some tweaks here to the old crop estimate. If we jump to the bottom line, the old crop ending stocks estimate was reduced from 1.457 to 1.452 million bushels. So they just trimmed 5 million bushels off of it. To get there, they took off 30 million bushels off the ethanol estimate, and they added 40 million bushels to the export estimate. They also added 5 million bushels to the import estimate. So overall, pretty close to a wash, but just reducing that old crop estimate 5 million bushels down to 1.452. So that's the third year in a row we're coming in below 1.5 billion bushels on the ending corn stocks. Now let's take a look at the new crop numbers on the right. And the first thing you might notice at the very top of the column, USDA increased the planting estimate for corn. It was 94.1 million acres. Now it's 94.9. It also increased the harvested acres by the same amount. So they're finding a little more corn plantings than were first expected from the June report. The yield estimate did come down, as was widely expected. We're at 173.8 bushels an acre now. The trade was looking for 173.3, but the yield estimate we're seeing today, 173.8. When you combine the lower yield with the larger planting estimate, we still came up with a slightly higher crop estimate today. So instead of a 15.11 billion bushel crop, we're now looking at a 15.13 billion bushel crop. That's very close to the old record of 15.15 billion bushels. So it's a bit remarkable to me, given the extremes of weather we've had this year across such a wide range of growing area throughout the Corn Belt, that we're still talking about a crop that's close to a record crop this year. And I find that somewhat amazing. And you just have to pause and think, boy, what if we had good weather this year? We would really have a bin buster. Well, let's see the as far as the other tweaks to the new crop estimate, there were no other changes on the demand side. They just made that little increase in the crop estimate size. So the ending stocks, now we're looking at 2.221 billion bushels. That's the largest ending corn stocks we've seen, I believe in it ties a 7-year high. So this is the highest ending stocks we'll have seen in 7 years, and it's roughly 15% of annual use. So we're back up in a pretty comfortable, heavy surplus territory, something that we haven't seen for a few years. And obviously, that's going to be pressuring prices as we get closer to harvest. The state-by-state breakdowns from USDA just show up here, just some of the highlights. First, of course, 200 million bushels for the state of Iowa. And, I've driven through Iowa, and they've got some rough spots. So that's still somewhat amazing to me that they're holding up a 200 million bushel yield estimate. Illinois, we've got at 198. Now, obviously, I have the last year's totals on the right-hand column. So that's a big drop for Illinois from last year's 214. Nebraska coming in at 177. That's up a little from last year's 165. Of course, one of the saving graces for Nebraska is the amount of irrigation throughout the state, but it's still a very tough year. And I'm sure I'll hear more about that this afternoon when I head out to the farm show. Here, I'm not too far away. Minnesota coming in at 180. That's down from last year's 195. Minnesota having a much drier year this year. And overall, we still see in general that same west-east division where we've got the driest conditions in the Western Corn Belt, and the I states in Ohio were a little more protected and got a little more rain than everybody else. So for coming in close to a record crop, I guess it still baffles me a little bit that we're talking about a crop this big, given the weather conditions. The world corn balance sheet, we saw an increase in ending stocks. You'll see that in the rectangle in the upper right-hand corner. Instead of 311 million metric tons, the new ending stocks estimate for corn is 314. Well, where did that increase come from? It actually came from Brazil. Brazil is still in the previous crop season, not the one showing here, but the crop season prior to this. They're harvesting their corn right now, and USDA increased its estimate of Brazil's corn crop today from 135 to 137 million metric tons. So that's 2 million metric tons of the increase. And of course, a little bit came from our higher crop estimate here in the US. We also saw a slight increase in Ukraine's corn crop estimate. Somewhat amazing, again, considering all the war and attacks that Ukraine has been going on. But they're actually coming in they had good weather this year and are coming in with a larger than expected corn crop. Now they're at 28 million metric tons. Now, of course, Ukraine's problem for both corn and wheat is going to be moving that grain. And we do not see an increase in the export estimate for corn at Ukraine, if you notice. But basically, Brazil and the slight increase here in the US pushing the ending stocks total up higher. Now, I like to look at the world ending stocks figure excluding China. and I think it's a more accurate number or metric to go by. And that number is also in the red rectangle on the upper right corner. And you see those ending stocks, if we exclude China, increase from 109.75 now up to 112.2 million metric tons. So again, much of that coming from Brazil. Here is a historical perspective of where we stand as far as world-ending corn stocks. And again, that's excluding China. The new total comes up to 4.42 billion bushels of ending corn stocks in this new crop season. That's still the most in 5 years. So given Brazil's record production and the U.S. coming in so far with what looks like near record production for the U.S., thanks to that big planting estimate, those world corn stocks are on track to be at their highest in 5 years. What about the basis here in corn? Well, we've seen just a steady slide downward in the corn basis all through the summer, and that's somewhat seasonal. That tends to happen every year, but especially when we're going from a situation of tight old crop supplies to a bigger harvest anticipated this fall. So the closer we get to fall, we're seeing the basis numbers start to come down. Last night, DTN's National Corn Index was at $4.72. That's 14 cents below the December futures. Now, for this time of year, it's still the fourth strongest basis we've seen since 2010s. So it's still showing good, I would say, domestic demand for corn. That's helped the basis, but definitely there's been quite a decline since earlier this summer. U.S. corn exports, the season just ended for the old crop season, August 31st, and the biggest or the most complete total we have so far is 1.659 billion bushels of corn were shipped at that time. Now there's one more Census Bureau report that'll come out for the month of August. So I think that's why USDA raised its export estimate today. Now they're putting it at 1.665. So evidently they're anticipating a little more corn export to show up in that Census Bureau report that'll come out next month. But overall, corn exports this year have been disappointing for a long time. We've been talking about this probably just about every time we've had this WASDE webinar all season long. We're well below the 4-year average, far below 33% below last year's export level, and a lot of it was due to the success of Brazil in growing record corn crops and outselling us throughout the entire season. So it's been a very tough situation. And as far as U.S. corn exports go, this is the lowest in 10 years that we saw. Corn's volatile summer. So here's the price path of December corn from the early part of the year. And as you can see, we had some big wide swings in there when we had that drought scare in June. And then, of course, we had a pretty tough bearish response in the month of July when the rain showed up. And also when the June 30th report said that there was such a big corn planting available. So basically since that time, it's still been volatile, but overall corn prices have been sliding lower, and a bit of a surprise to me, even with the hot, dry finish that corn had in the second half of August and here in early September, still having a very difficult time getting corn prices to rally. And of course, today's certainly not going to help with the near record estimate for the corn crop. One thing that's interesting here is that the non-commercials or the spec crowd in corn is net short at the moment, but that also means that the commercial side of the market is net long. So evidently corn prices are getting cheap enough to have some appeal to end users. So that should offer some support to corn prices, but we still have a harvest pressure period to go through. So I anticipate some further downward pressure here. Okay, taking a look at soybeans, we have a much different situation in soybeans. Here's the U.S. balance sheet. Again, I'll start in the left column, which is the old crop season that just ended August 31st. We see basically, if we jump down to the bottom line, the ending stocks estimate was reduced by 10 million bushels, now 250 million bushels. That works out to where we go, 5.8% as an ending stocks to use ratio. So we're just under 6%. A fairly tight supply, again, historically for soybeans. There was one change made to the estimates for the old crop side, and that was a 10 million bushel increase in the export estimate for soybeans. And we'll see why that is in just a moment when I show you that chart. But 250 million bushels is basically where the old season is going to end. And of course, we'll get the final number at the end of this month when we have the grain stocks reports for both corn and soybeans. We'll get the ending totals for September 1 on that. Now let's move to the right column, the new crop estimates. And again, we'll start at the top with the planted acres. There was just a tiny tweak, not as big a change as what we saw in corn. The planted acres just went up 100,000 from 83.5 million to 83.6 million, and they did the same 1,000 acre increase on the harvested acres as well. So not a big change in the acres. The yield estimate did come down from 50.9. Now USDA has a soybean yield estimate of 50.1 bushels per acre. That was very close to expectations. Well, the trade was looking for 50 even, so I'd say that was pretty much in line with expectations. The new crop estimate is reduced slightly. Instead of 4.2 billion bushels, now we're down at 4.146 billion bushels, and that is the smallest crop we've seen in 4 years, if that holds out to be the case. With the smaller crop size, USDA also made some small changes, reductions in the demand estimates. So they reduced the crush total by 10 million bushels, and they reduced the export total for soybeans by 35 million bushels. That tends to be par for the course when you also reduce the crop size. They make changes to the demands as well. If we go all the way to the bottom, the new ending stocks estimate for this new crop season is 220 million bushels. That's down from 245 last month. The average farm price estimate is $12.90, but I can tell you fundamentally, DTN can make a pretty good case that prices should be higher than $12.90 when you have that tight of a soybean supply. So we'll probably talk about that in future webinars. The soybean yield estimates, here's the state by state breakdown. And the first thing that jumps out to you maybe in the middle of the country is Iowa at 58, Illinois at 61. Last year, that's very similar to where Iowa was last year at 58.5. Last year, Illinois showed up at 63. Minnesota coming in at 48, or they were at 50 last year. Nebraska coming in at 55. They were at 49 last year. And Missouri, very similar to last year's total, 45.5. So overall, last year was a hot, dry year, and we got beat up on yield, especially in the western part of the Midwest and the plains. And that appears to be the case again, pretty much this year. The ending stocks estimate, or not ending stocks estimate, I should say the snapshot estimate of world soybean supplies from USDA was reduced slightly. If you see in the upper right corner, instead of 119.4 million metric ton, USDA now estimates 119.25 million metric ton. There were no significant changes to the production side of the coin or anything else. And of course, South America is just starting now to get started planning on the new season for both corn and beans. So we'll be watching that more as in the days ahead. The only changes really to note here are on the line at the bottom of the report for China. If you notice, USDA increased China's demand estimate for soybeans from 118 to 119 million metric tons, And with that, they increased the import estimate for soybeans from 99 to 100 million metric tons. I think it was a few months ago they reduced that, and it was hard to understand why, but it is interesting to me that we are seeing very strong pricing for soybeans in China, and that seems to have no effect from all the negative headlines we're hearing about China's economy. So there still seems to be a very strong demand situation in China for soybeans. As far as the U.S. basis, like corn, we're seeing the normal seasonal trend through summer of declining or weakening basis. It's on a lower path than last year's. You can see comparing this year's red line to last year's blue line. But overall, it's kind of back in the middle of the pack, or where the average basis normally is for this time of year. Last night's close on the DTN National Index, 1323, is 46 below the November price. So we're getting pretty close to harvest here, and the basis reflects that. Here's the export path for the old crop soybeans that just ended. The total, if you add the weekly USDA figures plus the Census Bureau, the soybean exports came up to 1.992 billion bushels. That's down 7% from a year ago. USDA bumped up their estimate to 1.990. So I would guess they'll probably have another little tweak to make before it's all said and done. But same as with corn, there's going to be one more report from the Census Bureau next month, and that'll give us the final figures on the soybean total. But overall, compared to corn, soybeans did much better this year. They were just under their 4-year average, and as I said, they're down 7% from a year ago. It was the lowest export total in 3 years, but not that far off its normal pace. So soybeans did fairly well, and especially when you consider that we had a tough year as far as shipping beans down the river this past fall. They got off to kind of a tough start with export limitations. And I have to mention, once again, we're looking at a very dry river situation this fall, and that could be a factor, again, limiting our barge traffic. The crush side of soybeans continues to be very profitable for soybean processors. Demand for soybean products, this is as of last night, $16.66 is what you get from crushing 1 bushel of soybeans into meal and oil. And that gives processors a very handsome return. In fact, it's still some of the best returns they've ever seen. And this all started just in the past 2 years. And of course, it started with the new renewable diesel market for soybean oil that added so much value to the crush process. Here we have the November soybean price chart for the year, and like corn, they also had a lot of volatility this summer, but unlike corn, we're not pushing our lows. This is a very bullish market still, and obviously we're anticipating the lowest new crop ending stocks in 8 years, and we just had a very dry finish on the crop, so it'll be interesting to see what the final production numbers are when they come in. But this is a market where it doesn't look like we probably produced enough soybeans to keep up with demand this year without getting some rationing involved here the next several months. A dry finish. We had several weather surprises this year. It seemed like every month. Nobody thought we would have the hot, dry start to the crop that we did. Then when the rains did show up in July and early August, they were actually more than normal, and really helped crops rebound quite a bit. Had kind of a mild or more moderate finish, we'd be talking about much bigger crops today, but that wasn't the case. We haven't really seen a significant rain until this week, going back to August 15th. So we had almost another month at the end of the season of extremely dry weather. the color totals on here, the orangish shaded areas are basically 1 to 2 inches of rain over the past 30 days. So you can see that's not a lot, and especially when you're dealing with temperatures in the hundreds in many of these parts of the Midwest. So that wasn't much moisture to help them finish out very well. So very tough end here, and I think we'll probably see more evidence of that as harvest picks up. All right, taking a look at wheat. Wheat's very simple today. USDA did not change any of its US estimates from last month. The ending stocks estimate is still 615 million bushels. That works out to just under 34% of annual use. It is the second lowest ending stocks estimate for US wheat in 10 years. I will note among the classes, there was a tiny change, and that is that the ending stocks estimate for HRW wheat increased 10 million bushels up to 256 million bushels, but spring wheat was reduced by 10 million bushels down to 138 million bushels. So we're looking, I believe, at the lowest ending stocks to use ratio for spring wheat in 10 years. And wheat prices were showing some higher trading after the report. And I'll try to give us a summary of where prices are at when we get to the end here. The world ending stocks estimates for wheat had a bit of a bullish surprise today. If you look at the upper right corner, the USDA's estimate of ending world wheat stocks dropped 7 million metric tons from 265.6 down to 258.6 million metric tons. And 5 million metric tons of that drop was also in the world ending wheat stocks outside of China. So both of the world estimates from USDA for wheat taken a pretty good hit. And to explain those drops, we see 4 countries where we got lower crop estimates and just 1 country where there was a higher crop estimate. And the rectangles show the 4 reductions from Argentina, Australia, Canada, and Europe. Australia had the biggest reduction, 3 million metric tons. They've had a drier time this year, and of course, they're dealing with El Nino, which tends to give them drier weather when that's active. Canada also has seen dry weather in the Western Canadian prairies this year, and they dropped 2 million metric tons on their wheat estimate. So there's 4 big important players right there with crop reductions in today's report. Ukraine was the sole beneficiary of good wheat weather this year. And their crop estimate increased from 21 up to 22.5 million metric tons. And USDA gave them a slight export estimate increase from 10.5 to 11 million metric tons. So this was a bit of a surprise today. And I guess the other thing I should mention, and it's a little bit covered up by the rectangles, sorry about that, but Russia's estimates stayed the same at 85 million metric tons. And that's a little surprise. There are private estimates out there as high as 92 million metric tons, but Russia stayed at 85. But anyway, today's reduction in the world ending stocks were a bit of bullish news for the wheat market. And this is a market that could use some bullish news if you know. Here's the historical perspective of where today's world ending wheat stocks, excluding China, stand. Right now, they're at 4.62 billion bushels for the new season. Turns out that that's the lowest in 15 years. So as you can see, it's not out of range of what we've seen the past 15 years, but it is definitely at the low end. So that tends to be what could be a potentially bullish situation here for wheat. But the tough thing about wheat is that Russia has had 2 big crops in a row now. Last year they had a record crop, and this year they're having what looks to be not quite as big a crop as last year, but still gives them plenty of wheat. And they continue to dominate world wheat exports with low prices after those 2 big crops. So Russia continues to crowd out export business out of the US. And of course, they're suppressing movement out of Ukraine, not allowing any traffic through the Black Sea. So right now, Russia remains in the driver's seat when it comes to world wheat trade. The basis here in the US for hard red winter wheat has stabilized a little bit since early August, but it's still in what I would say is a historically bearish location. Last night's HRW wheat index closed at $6.54. That's 70 cents under the December contract. And for this time of year, that's among some of the lower basis levels that we see historically. So we're having a very difficult time finding any demand, and especially export demand here in the US. Our export demand is estimated at among its lowest in 50 years. So very, very tough situation for US wheat right now. Here's the Kansas City wheat contract. And I just wanted to point out in mid-July where I've got the red arrow there, that was when we saw the end of the Black Sea grain initiative when Russia pulled out of that deal, and we got a brief bullish surge and even traded above $9 a bushel briefly, which Kansas City wheat and Minneapolis wheat have both had difficult times doing. But as you can see, that brief price spike just did not hold up. And even though Russia has aggressively attacked Ukrainian ports and is blocking Ukraine from using the Black Sea right now, uh, the market has just fallen back to new lows for the year. Now, recently, in about mid-August to September now, as the Kansas City wheat prices have fallen into the low sevens, we're seeing more commercials willing to go long Kansas City wheat. And that typically is a sign of support, and it's typically a sign that prices are so cheap that end users are considering them to be a good bargain. So somewhere down here, prices ought to be finding support, but it's been a very difficult market, as you probably know, for the past year. In conclusion, I'd have to say today's report was bearish for corn. It was disappointing to see the new higher crop estimate due to the higher planting acres. So even though the crop did come in with a lower yield estimate, the crop size actually still went higher, and that pushed ending stocks back above 2.2 billion bushels for the time being. So that's still a very bearish outlook for corn prices, and puts our expectations well below $5 for corn in the near future. Soybeans, I'd say today's report was bullish. I understand soybeans are trading lower right now. I'll show that in just a second or talk about that. But there's just seems to be no doubt in my mind that we're going to have another year ahead of us of very tight soybean supplies. And I don't know how else we get around that. And right now, the demand from the world is quite active, and we've got a very strong crush market here in the US. And then lastly, wheat actually had a bullish report today, thanks to those lower world ending wheat stocks. That total, excluding China, now the lowest in 15 years. Even our US wheat stocks are the second lowest in 10 years, but again, the problem has been demand and finding some export markets for that. So just the final note there, we do the next WASDE report's October 12th, but I should have mentioned it's at the end of September. We're going to have a grain stocks report and a small grains annual summary. So there's one report before we get to October 12th. And as I mentioned, or as Andy mentioned, I'm out here at Grand Island this week with John Baranek. John's given his fall and winter weather outlooks. I'll be talking about my best guesses for corn and soybean prices ahead into early 2024. If you're anywhere near Grand Island, come on out. We're on the east end of the show, and we'd love to see you and say hi and hear about how things are going at your place. So with that, Andy, it's all yours. Any questions?
You know, Todd, this is last time we had quite a few. This time we have 0 questions that have come in. So it sounds like it was pretty straightforward. So nothing else to go, nothing else to do here. We'll just say a big thank you to everybody for joining the conference call today. And just a reminder, this has been recorded. So if there's anything you missed, that will be on dtn.com in our events section and our webinar section within the next 48 hours. And then Todd, as always, has been gracious to put his personal contact information up there as well, if you'd like to get any more information directly from him. So, Todd, not sure if there's anything else you'd like to say. I'll just say thank you once again to everybody and say have a great day.
Thank you all.